Good morning. Here is today's Korean economic news briefing. We begin with a significant development in Korean economic policy coordination. Deputy Prime Minister Koo Yoon-chul and newly appointed Bank of Korea Governor Shin Yun-song held their first official meeting this morning in Seoul. The two leaders gathered for a breakfast meeting at the Banking Association headquarters in Yonggi-yu, where they pledged to strengthen policy coordination and maintain regular communication to address current economic challenges. During their discussion, Deputy Prime Minister Koo emphasized the need for close consultation between fiscal and monetary authorities, while Governor Shin committed to actively responding to market stability issues. Both officials acknowledged the importance of harmonizing monetary and fiscal policies, particularly given the ongoing Middle East conflict and its potential economic impacts. They discussed concrete measures including exchange rate stabilization, structural reforms to support growth potential, and the implementation of a 24-hour foreign exchange market. Additionally, the two leaders agreed to collaborate on establishing an offshore Korean currency settlement system to strengthen Korea's financial infrastructure. Now, let's examine what sparked such urgency in this meeting. Earlier today, the Bank of Korea released surprisingly strong first-quarter GDP growth data. Korea's economy expanded 1.7% quarter-over-quarter in the first 3 months of this year, the highest growth rate in 5.5 years since the third quarter of 2020. This figure nearly doubled the central bank's previous forecast of 0.9%. The robust performance was primarily driven by semiconductor exports rebounding strongly from the previous quarter's negative growth of -0.2%. This growth development has broader implications for the year ahead. If this momentum continues, Korea's full-year growth rate could exceed 2%, a meaningful achievement considering recent economic headwinds. Notably, Korea's real gross national income also increased 7.5% year-over-year, the highest increase in 38 years since the first quarter of 1988. Governor Shin characterized this performance as evidence of Korea's economic resilience, while Deputy Prime Minister Koo pledged to implement comprehensive measures addressing consumer prices and oil prices with maximum effort. The positive economic data translated directly into stock market performance. The Kospi index reached an intraday high of 6,500, marking its fourth consecutive record high. Large-cap stocks, particularly Samsung Electronics, broke new highs, and semiconductor, power equipment, and shipbuilding sectors showed particular strength. However, the market's gains were tempered by geopolitical concerns. The Korean won weakened, trading above 1,481 won per dollar, while the 3-year government bond yield climbed to 3.4% annually, its highest level in approximately 2 weeks. This divergence reflects investor anxiety about Middle East tensions despite underlying economic strength. Meanwhile, the technology sector continues attracting significant global investment. KAIST startup Point2 Technologies successfully raised $76 million, approximately 100 billion won, from global investors including Maverick Silicon and UMC Capital. The company's core technology, called eTube, represents a breakthrough in data transmission for artificial intelligence data centers. This technology uses radio frequency signals through plastic waveguides, addressing limitations of traditional copper wire transmission and cost concerns associated with fiber optic solutions. Such developments underscore Korea's growing importance in the global AI infrastructure ecosystem. Shifting to the real estate market, competitive pressures for property purchases remain extraordinary. Seoul's Accro de Seoko apartment complex in Seoko-gu recorded a record-breaking subscription rate of 1,099 to 1 for its first priority public offering, the highest ever recorded for Seoul private apartments. The exceptionally high competition was driven by favorable pricing enabled through the supply price cap system. The properties were priced approximately 78.14 million won per 3.3 square meters, meaning units of 59 square meters reached around 1.86 billion won. Potentially offering price appreciation of over 1 billion won compared to nearby complexes, earning the nickname, lottery subscription. Korea's real estate prices continue accelerating broadly. Metropolitan area apartment supply prices have surged 16.6% annually and 2.6% monthly, reaching an average of 33.02 million won per 3.3 square meters as of March. Station proximity apartments command premium valuations, with subscription competition rates 40 times higher than non-station properties. This disparity reflects intense demand for convenient transportation access in increasingly crowded metropolitan regions. On the international front, the U.S. Federal Reserve Chair candidate underwent congressional hearings this evening, with markets closely monitoring signals about future monetary policy direction. Meanwhile, the Middle East ceasefire extension provided relief to global markets. S&P 500 and Nasdaq indices closed at record highs on the news, while commodity markets stabilized. However, suspicious trading patterns continue raising insider trading concerns, with massive crude oil futures positions reportedly established minutes before official ceasefire announcements. Finally, South Korea's fintech sector demonstrates remarkable growth momentum. Kakao Pay Securities exceeded 15 trillion won in deposited assets as of April 17, expanding from 10 trillion won in January, a 224% year-over-year increase. This expansion reflects both market appreciation and genuine inflows of customer funds into digital asset management platforms. In summary, today's developments paint a picture of Korean economy experiencing genuine cyclical recovery amid external uncertainties. Strong GDP surprises and semiconductor sector momentum provide encouragement for growth prospects. However, elevated geopolitical risks, rising interest rates, and expensive asset valuations warrant careful portfolio management. For investors, the current environment requires balanced positioning between growth opportunities and risk hedging, particularly given volatile external conditions. General viewers should note that while economic indicators improve, consumer prices and housing affordability remain pressing concerns requiring sustained policy attention. This has been your Korean Economic News Briefing for April 23, 2026.